Hey everybody, happy Friday and welcome back to Markets and Sectors where we're going to review the entire week, generally speaking, where we're looking at markets, industries, and finally individual stocks that were noteworthy during this week. Folks, by the way, yeah, my name is Mike Fairborn, back from sabbatical for this class. So finally, I've taught all three classes this week that I normally do teach, three or four generally. It is good to be back with you. Really appreciate this group. I'd love to be here with you guys, folks. And any questions, comments you have, definitely throw those in the chat so we can address those for you. And in the chat, get my good friend here that I've known for a little bit, at least 15 years, a little bit more than that, actually. Cameron May, you see him in the chat as CM, and you can follow Cameron and I on X, Cameron May CS, Mike Fairborn CS. Folks, it's great to be with you. Let's do this. So we're going to take a look at the markets and plenty to look at here. Some interesting things, quite a bit of interesting things to kind of, keep eyes on this week and into next week. But let's start off with some disclosure items to get the show on the road here. Now, information here is provided for general information purposes only. Paper money software application is provided for education purposes only. Investing involves risk, including for some products more than your initial investment. Futures and futures options trading does involve substantial risk, not suitable for all investors. And as you can see, some just final points here. Past performance is no guarantee of future results. I don't know. I think we do have the stacks available to us, so that'll be great. Let's take a look at the stacks today, too. I just want to state on that. Historical data should not be used alone when making investment decisions. The stacks is not a tradable index. The stacks should not be used as an indicator or predictor of future client trading volume or financial performance for Schwab. All right. Well, let's dive on into it. Folks, I wanted to start off first, like we do each and every week in this class, with some market posture. We do like to take a look initially at the daily charts because they do provide interesting information. A lot of times, when you're looking at market posture, we're just saying basically this, very straightforward, very simply put. Are we above some of the longer term moving averages that are very common and the markets do, oftentimes respond to some of these key levels, whether on the bottom or on the top side. As you can see over here, one that we did test today, that would be right there. That would be our 50-day moving average right there. Now, we did bounce off it, and all else equal, you'd have to say, and the markets aren't closed, about 50 plus minutes left in the trading day, but all else equal, right now, that could be considered a positive because we're getting a bit of a candlestick pattern there, one that has been known for market reversals and one that you'll see generally, when you get these longer term wicks or shadows, as they're also called, coming through and testing off those levels, folks, it can be interesting. There's another one right there. We got close to it, but there you have it right there. Now, do we see a follow through? The thing is with candlestick patterns, you're always looking for the next day, the confirmation. In other words, do we close Monday above this level? Because, yep, believe it or not, you're going to have to close above that level like we did right there in order for prices to continue to close higher because it's just made up of higher closes to get up to higher levels. And so that would be like the next point you look at. We also refer to that as a hold. You won't find that in your dictionary. Maybe you're fine. Well, I think we made it up here in our group. But there you go. The hold pattern. And with that, it's a close above the high of the low day. It had to be a close on Monday, but that could be an interesting point testing that 50-period moving average. Now, we're a long ways away from the 100, which is another big one. And then also, you can see over here, the 100, and then down below as well, we've got the 200. Let's go ahead and take a look also at some other indications for market posture that will generally look at on a longer term chart. And you can see, you guys, we've talked about this a few times, and we've just said, on some of these bigger weekly moves, this is a weekly time frame. We're looking at a 3-year weekly S&P 500 as a guide, as a gauge here. Getting above the 10-period moving average, and this is when I say period, yeah, we're referring to a 10. It's not a week, it's a 10-week moving average, a WMA, instead of a DMA, a weekly moving average. And what's fascinating is, believe it or not, a lot of times you will see the weekly actually have even more touch points, or you might get that a little bit more clarity. So I think the weekly can be helpful. You can see over here, we are above the 10. Did we test it today? Yes, we did. As a matter of fact, we did. It's very, very close to like a 50-period moving average, but it's different. It is, in fact, different. We also will compare this with the 40. We're well above the 40. And a lot of times what we'll look for on these longer term moves, just looking at posture exclusively, is the light blue line, the cyan line, above our green line. A lot of times you might get close to bouncing. Right over here, what do you have right there? Boom. Cyan line closing above, and we're still seeing, even with today's pullback, it's hard to tell on a weekly chart, but the gap between these two looks to still be growing, and that just is an indication of strength. Okay, so that is another consideration, but this is market posture. How are we doing? We're up. We're still up, okay, on a weekly basis. It could turn, and we're going to look into more details on this. But before I go into detail on that, well, actually, you know what? Let's do this. We'll go ahead and dive into the general markets and sectors right now, so we can look at that, and then we'll dig down. We'll dive into maybe some of the industries and other areas as well. Okay, so where are we at right now? Looking at the S&P, let's go full screen right now. You can see that, gosh, it happens pretty frequently when you get below the minus 100 right here. We're talking about the McClellan oscillator. Mr. McClellan would tell us, you get below the minus 100, and then you get back up above the minus 70. And you know what we actually did do? We did that. It's a very fascinating indicator. It's strange in a lot of ways, but we've been doing this and looking at it for quite some time, and we've simply just done this. Take a look. So there's below 100, up above below minus 100, up above minus 70. Same thing here. Same thing here. Not there, not there. Look at the bounces. You never got it. But right there, you certainly did get it. And in a lot of cases, what will happen is a 2 to 3 week upside move is what can be anticipated. It's a different kind of an indicator. Within that indicator, it does reference a larger basket of companies in here, and that's the NYSE. So when we're looking at this indicator, folks, it's not correlating to the S&P 500. Key point. It's correlating to a larger basket, more market breadth with 2,700 plus stocks as opposed to the 500 here. You know, you're going to get virtually many of those 500 within the NYSE. So you're getting that correlation, but it is a bigger basket. And what it's saying is the NYSE is possibly giving us a positive sign there. That's what it's showing right now. Now, if we look down below, advanced decline line, how are we doing here? Advancers versus decliners, NYSE as well. Well, we're making higher highs and higher lows. And what I always like to say is, if I can't see the indicator, what's the point? So now we can maybe see that indicator a little bit more, and you guys can see it right there, and it's right here. So we did make a higher high with the markets, and interestingly, we made a low here, but we are making a higher low. So all else equal, I have a positive insight there as well. Now, you might have guessed where we're headed. Well, we're headed to the next slide here, the next screen chart, but there is your equal weight. The equal weight didn't go as high when you're combining the weights of all of the S&P 500 companies equally, because remember, it's not equal weighted. It's weighted more towards actually the bigger companies that have the bigger market caps. And what is that going to be right now? Technology. But collectively, we're still in a sideways range. Now, where could weakness be? Folks, this is the symbol, SPX EW. A lot of times, not every case, nothing's every case in the market, but in many, many cases, when the market begins to break lower, you might see the cracks of it start to emerge initially in an equal weighted or a market breadth kind of a scenario. So if this guy were to do this, break down, well, it could be showing a sort of some breaking into some lows of the larger group, and it could mean weakness for the market. Now, we're not getting that. In fact, we're holding that support level very good. But that's an early sort of an indication that one could look at. Oh, that's good to hear, Riceberg. Yeah. Guess what? That's the next chart up too. The daily, weekly, monthly. So you get the quick reference. Yeah, it's a good thing to have. As you are looking at different time frames, it's an easy way to check and see historical support and resistance levels as well. I mean, you can do it with different indicators too. So definitely. Uh, Yep, got that, Kelly. Yeah, you can change those. We have looked at EMA. It's very, very similar on a weekly chart. It's almost identical, but yes, you can vary those a little bit. I just happened to was looking and comparing them today. I just went with the simple because they were almost the exact same thing. Jay Richardson, though, he's got us in terms of what we're looking at right there. Where we headed? Well, we wanted to see something that we hadn't seen for a long time, which was a good time to not see it, and that was right over here, this gap, the Hindenburg Omen with the red omen spikes down below. Look at the range, folks, over here. That's kind of like coast is clear, right? A lot of market pullbacks. Now, by the way, this is a 5-year weekly chart, but a lot of market pullbacks will come when you're getting that chasm between a 52-week new high on the daily and a 52-week new low on the daily, when you're getting a fair number of those. So 52-week highs and lows, a large number of each. What could that spell? What could that spell? Well, a chasm in the market, and sometimes that's when you get some breaking down. Key points. Do you see all these over here? Right before we started to go lower, the spikes really came into motion right there. Over here too, just an example. I mean, right at this top, you had several indications to, hey, beware. Trend change, lower lows and lower highs. I repeat this a lot because this is what you want to look for if you do get a lower low, lower high. And there's your confirmation of additional weakness. In other words, you're getting a fair number of 52-week new lows right here that could correlate and help to just push that trend lower. So be mindful. We got a couple of back-to-back spikes. We haven't had a couple of back-to-back spikes since all the way at the beginning of 2025. And guess what happened? That's when we came down. Now, does that mean it's going to happen this time? No, but we're watching price action as an indication. What are we watching? We're watching that trend. We just looked at the 50-day moving average. If we start to break lower on the 50, well, 50-day moving average, if the SPX EW begins to break lower, advanced decline line, all the ones we just looked at. We have a few different signs to look at, but we'll hit those each and every week for sure as we go through and take a look at these. But so far, those are showing positive, and I'll show you something else here in just a second. Not too much to say. We're just not seeing a lot of new 52-week new highs coming in. In fact, that number went down, and that's not a positive sign. As we had a spike in the NYA, the New York NYSE, or the NYSE, as they refer to it as, 50 new highs. And then as we're comparing that with, some of the new lows out there, well, the highs were really dipping even as prices went higher. So not a lot of strength, but I'll tell you what's interesting is if you exclude a lot of the tech stocks, and what have we been talking about? The AI, just massive amounts of capital investment into AI by the companies themselves, okay, have been pushing stock market prices higher. But if you think about the NYSE, just think broadly about all the companies in there. Not a lot of them have, obviously that kind of capital investment potential. And so excluding AI, a lot of that AI spending, what have we been getting collectively with those companies? Very few highs. So this kind of ties in a little bit more to the Hindenburg Omen, you'd have to say. I mean, you were up here testing highs, but just kind of came back down here. So try to examine many of these signs just to kind of help us along the way. One of the big ones, though, is just really what is price doing, and then what are the indicators showing after the trend changes. Okay, quick note. As we look at seasonality on the chart, you guys might know where you can get that seasonality. All the other ones I've been showing you are simply just indicators that could be added to a chart This one's a little bit different, so I wanted to kind of show you where it's at. If you haven't seen it before, style, click on style up top, chart mode seasonality. We're not standard, we're seasonality. So it looks at the last, in this case, the last 10 years, and it just plots all of the market moves, and that's our red line, and it averages them all together. And it says, where do the markets tend to move? What days during the month, etc. Where are we at in this case? And we saw actually a strong October, and November we're coming down, but November generally goes up. So this is just a great example. When you're starting to see seasonality, it doesn't always line up, right? It's just a lot of times it can, and we saw a big chunk of that here. This was a strange year with the tariffs over here, dipping the markets down. But this is kind of the traditional year-end rally that we get over here in November. Will we get some of that over here? Remains to be seen, but it is interesting to see. All right, well, that is just about that. Here is your 30-day, 30-minute chart. This is always fun to look at. Interesting, I should say. Interesting to look at as we view the markets, because here's the thing with the markets. Lower lows and lower highs. This is just the S&P 500 30-minute. Very helpful to look at, actually. 30 minutes. Why is that? Well, we had this big 50-day moving average coming through here that we tested. And what does it look like on a short-term basis? One thing you could actually see sometimes that's helpful and can provide additional insight if we're looking or anticipating a daily move to the upside. And that would be something like, how about, one thing we haven't seen over here is trend change. So going forward into next week, what if we got this? A higher low and a higher high. Right there is a potential trend change. And when you get that, it can influence the underlying trend. So some traders might even go to shorter term time frames to kind of get just even a more minute sense of what's really operating, behind the scenes here. Okay, I got that. Sure, we'll take a look at the VIX just momentarily for sure here. And Lakshmi, yeah, oh yeah, absolutely. Oh, the turtle. Yeah, the turtle indicator, which we did go through. We had to build that one. That's not something that you'll find as part of the Thinkorswim, normal sort of set of indications, but that is one too that steps outside the normal range actually of looking at highs and lows. And in fact, just as a quick note, because since we're talking about trends, that was actually a very timely kind of a comment there, Lakshmi. So I do appreciate that. But I'm just going to highlight this real quick and just show you where this is at. And I'll just give you a quick explanation just so you guys do have it. In fact, let's just do this. Pull this guy up right here. And what we'll do is we'll just go into our playlists. You can get a number of actually, I'll just go over here and type in turtle. I don't know if you guys have heard of the turtle traders before, but it's part of the trade, this list here. But what it is, and I didn't mean to click on it. Sorry. What basically it is, and I'll put this link if you guys want to do it, because this could tie in if you haven't seen this before. Turtle link. I'll show you what's going on, and this could be interesting because what they'll look for are a couple of different things. 20-day new highs or 55-day new highs. Now, that's how this group identifies a trend. And speaking of trends, that can be useful in the markets. Within that class that I taught, did create an indicator which shows that for us. In fact, I'm going to go back into the good old traditional daily, weekly, monthly here. And what I'll do is I'll just show you, like over here or on any of these. Here's a company that actually came up in our list yesterday. Just as a side note, I'll throw the ThinkScript on because this is a brand new code. I just coded it this week for us, but there is the 20 and the 55. And I've got some indications here. Like here is one that came up on the list. It was showing some strength, and you can you can change the colors really easily in the script. But there's a 20, there's a 55, a 20 right here. It's just showing that's a 20-day new high and is designed to really just get those break above the ranges. The 20 is really the short term. The 55 is the long term. This was seen as a successful campaign. The turtles, at least they say so, But in terms of this, can give you just a reference point, be a little bit more in-depth indication, at least through what these guys used in terms of, hey, is this trend really developing? Could it go higher down the road as well? So anyways, I have that indicator and I have the scan in there too, but it's not part of this class. So I'll just leave that link with you. I do supply those codes though in that class in the description field. If you haven't gotten them yet, just there you go. Okay. But by the way, if you're getting value out of our discussions, folks, smash that like button. Great to have you here. And also, of course, we'd love to have you subscribe as well. Don't see any surveys in the chat, but I will keep an eye on that. All right. Now, I'm going to dump this guy for a second. I'll just remove him from the show study. There we go. Well, you know what? He doesn't want to go. So we'll just take him off like this. There we go. All right. So let's see, where were we? We got through this, that, the other. Let's take a look at our market sector rotation. Now, folks, I'll supply this grid real quick. This is not a Think script, but it is a grid, and I'll share it right now. I think many of you do have it. I've updated it in terms of just keeping the titles in place. And I'll also have this in the More section down below. Here is that link right here. Just posted it. And this is just giving us a good solid reference. Hey, how are the S&P 500 sectors doing relative to the S&P 500 itself? And what do we see? Well, we see, there's a little bounce in materials lately. Financials, discretionary, really quite positive. Infotech has really been the standout. And by the way, as we've discussed within our own sort of indications here, we can see how actually we've isolated, even through market breadth, we could say that Infotech was doing well, and it has. It's really led the market. Even though the market's been going up, if that line's going higher, because we are using the relative strength indicator, not RSI, but RS, so it just looks at performance relative to the market, you can see the strength. Healthcare, kind of a little bit sideways. I don't know. Maybe is it ready to kind of break? It hasn't been going down, that's for sure. Communication services, somewhat similar, and utilities had an earlier bounce, but a lot of selling. What you'll notice today, and this is kind of gives us a glimpse at sector rotation. Energy up, materials up, financials up, discretionaries, which had been strong, down for tech, up for industrials. Healthcare, which has been up, is also up again. There could be a rotation into some of the healthcare. We're seeing strength and then strength. This is a check mark. This is just kind of like, general check mark, general check, and general check. Everything else, what had been going up is going down, with the exception of healthcare, and what had been going down is recovering today. So basically what you're visually seeing here is a rotation into some sectors today. They're outperforming the market. Now, they might not be going up necessarily, but they're just not going down as much too. That can play a role. What do you got over here? So you can look at this. In fact, most of these are going up. Yeah, so I'm just looking at the pluses over here. Energy plus. Yeah, they actually are going up despite the S&P going down 17. So that'll help you in that sense to kind of get a general feel there. But all right, well, let's do this. Let's pop back and we were going to look at a few things within the market. So over here too, I wanted to jump back and just make sure I'm hitting that point on the VIX though, real quick before we hit it. Look at crude light. Now, Saudi Arabia kind of postponed an additional, what it was, I've written it down here. They paused planned output hikes. And what that would do is just kind of, keep things maybe flat. In other words, there's not going to be more supply of oil, so maybe it won't go down as much. That could be factoring into oil a little bit, a little bit. There's your gold right there. I posted a little XVid yesterday, which is really, it's another way to use ATR spikes that can be quite useful for you guys to take a look at. This is just a clear one where you're just getting a lot more of a volatile range. Look at the size of the bars up top. Now that can mean top heavy. It's also referred to as a blow off top. We don't know if that's going to happen there. But you can also get capitulation, a big, like over here. See the size of these bars on the downside? Really quite big. So we saw some of that here, could account for a sideways move. If you want to find out more about that, because it was relevant, just here is, oh, let's see. What I'll do is, let me see if I could just get this posted over here for 1 second. I want to highlight this for you guys, just so you had it. Okay, so we'll just drag this up here, show you. If you come down here, I posted this. It's just a short 2-minute video. It does talk about these historical ATR spikes that can be of interest to you, perhaps. We'll dive into other aspects of this just momentarily, but there you have it. Okay, so that is gold, that's silver. And we did see just a little bit of a bounce to the 10-year rates. They kind of hovered around 410, 4.1 to 4.17 as the markets dipped. We saw a little bit of a recovery there. What will be interesting to see is, does this form? If the markets go down, sometimes you see money going into the safe havens out there, perhaps, or safer, whatever they consider to be more safer, into the yields. That's one way to look at it, is what way some traders will look at it. Okay, but that could be construed as, and I'm drawing ahead, but that could be like in inverted head and shoulders bottom. This could show strength. That's way ahead, but I don't know. But I've seen kind of formations that look like this, because it is a little bit different from this corrective move, down, down, down. Look at lower lows, lower highs, lower lows, lower highs, and what? Oh, similar highs. If you come back down here and rest on this similar low right around 4%, or sometimes it just goes sideways and can move. Now, it could go down too, but I just want you guys to keep an eye on that, because not just to try to get higher interest rates on a 10-year yield, for example, but as a possible indication of what the markets might be doing, or where that money flow might be heading into as well. Okay, so we did have, though, a question on the VIX. Appreciate it. Let's take a look. I'll just scoot up to that real quick and just hit that again. Okay, Reggie mentions weekly candle is closing above last week on the VIX. Okay, so we're looking at a weekly VIX, aren't we? So all I got to do now, because I got the chart set up, just flip it to a weekly, and we'll go over here. Weekly candle is closing above last week on the VIX. Also, VIX and the S&P 500 are filling yesterday's gap. What do I think on that? Yeah, so it is an interesting indication. If you see, so this is what I like to say. You could still use, a lot of traders do use, because there are correlations to them. If you're wanting to use this technically, take these lines over here and say, where was prior resistance? Now, we tested up above that on the VIX, could easily be used again. If you break above, and you tend to hold above that level, which we kind of sunk back to today, but notice over here, we held above. It's kind of one of those big numbers on the VIX, 20. Let's go back and explore again. This one broke up above there, and it held above 20 for a little bit. This one did too. Now, we had 1-day spike, but there was a big shadow coming down. Let's look at the 20. Look at these. Look, the case in point, folks, closing above the 20 with some force. We had the potential for force today, and we bounced back. Maybe seasonality will save us. Let's see, what else could save us? Whatever it is, earnings. There could be a lot of different things out there. The 50-period moving average, just that long-term trend strength, the year-end rally. We don't know. But see the strength above the 20? This is one area. Look at this. This is good. This is a great point. This might be very similar to where we're at right now. If I go back just a little bit more on that VIX, man, I can do a lot. Right there. Okay, here's our 20. What did we do? We went above, but we didn't close above. Look familiar? We tested, and we went back down. Tested again. Look at this. Test, test, test. What's next? There's your there's your close with a bigger bar right above the 20. And then we saw the VIX spike higher. And folks, by contrast, what does that mean? Markets it's an inverse correlated indication, right? In the vast majority of cases, especially on a big move like that. So that's an interesting observation on the VIX, and I'm glad that point was brought up because that's kind of one of those levels. I mean, I've set to like you can right click over here on the chart, and you can just click on create an alert, and voila, you can say above 20 or whatever, and just get that emailed or texted to you. I tend to use the text messages on that. Okay, and let's see. Yes, I did share the link to um, this class, excuse me, to the charts over here, the rotation, sector rotation grid, right there. So that's there. Yeah, that was the one in there, and I'll have that in the description field below as well for you guys for sure. All right. Now we've got to get into some stocks here as well and look at some industries too as we go through this because it was a lot still going on there. And let's do this. By the way, quick note, NASDAQ. How are we doing on the NASDAQ? Stronger move to the upside, just a good read on technology, generally speaking, as we went through it. The semiconductors, there's a fair amount of profit taking this week, right? I think, I really don't, I mean, here's, by the way, some big round numbers. There's 200. That's a big number. Sometimes you have to have extraordinary fundamentals to get up above a level like a 100 or a 200. I mean, down here, here's your 100. You tested there last time. You do have earnings coming up. I mean, NVIDIA, potentially a key driver. Now, some of these too, in other areas, had been as strong, but we did see like A, B, and B. You can look at a lot of different tech stocks, but here's Airbnb. It did announce earnings right there, and basically, they were stating basically pretty resilient demand across the board. Now, some traders will like to get an earnings announcement like this because what that will do, and it's been kind of flat through here too, but there was an upbeat Q4 guidance on that as well. So they guided a little bit higher. Another one over here, MCD, McDonald's. I know you guys love McDonald's out there, probably especially for breakfast, right? Comps were solid on it. You saw them move up this week. The comps were solid. The EPS a little bit light versus the street. In fact, if we click on it, you can see over there it was a little bit lighter. The actual didn't quite meet expectations, but I think the guidance was okay. But the comp sales were actually pretty interesting there. Just highlighting a few of these this week. But a lot of times after those earnings announcements, what some traders will do is they'll say, okay, here's the high on McDonald's, and here was the low over that range or on earnings. And if you start to break that low, maybe that's off the table, but maybe if it holds within this range or breaks higher, some traders might be a little bit more bullish on it. You can do that on those earnings announcements because there's just a lot of volume on those days as well. Quick note though on Uber, they had really strong bookings. The cash flow was really good. One thing is there's regulatory, there's legal costs, and that's kind of pressuring the operating profit. Legal, regulatory costs. They're throwing out more costs out there in some of these states, and that's having a negative impact on it. But in terms of the company itself, pretty strong. What was I telling you guys about? Those big round numbers. What's that one? Oh, 100. We just tested off it. We don't know. But hey, sometimes look at this. It's kind of a pinball between, can be in a lot of cases, a 10-point range. But what do you guys think? If I were to ask you this, if a stock like this or any stock trades up to 100 here, does that look like a buy to you? Or would you be a little bit more cautious on the buy at that point? And why would you be cautious? Maybe it didn't go through just yet. So do you have to give up a lot? If it's, let's say it finally closes above 100 like it hadn't done, we're like above that range, and then maybe it looks a little bit more interesting, or a couple closes above, or 1% or 2% above 100, or whatever the case might be. A lot of different ways to look at it, but there you go. Maybe a sideways range, maybe other sorts of trades until it gets above that level. Perhaps is one way to look at it. Okay, we had also PLTR. Palantir Well, look at that. Palantir. And Palantir had really interesting numbers. I mean, the numbers were good. In fact, I think they beat expectations, and they did. Look at that. 11 cents versus 21 cents on Palantir. In fact, they raised fourth quarter guidance. But what did we see this week? A lot of the tech stocks coming down. We saw that even on a rotation, relatively speaking, a relative basis to the S&P 500 with relative strength, and it was down. And it's hard to hold those up. Oh, where are we at? What's this number, you guys? Sometimes you start to see some of these after a while, and you're just like, whoa, we're still back at a big round number. And sometimes it can take a lot to get through those round numbers, right? To get through them. Yeah, so Dash was brought up. Dash did have a big dip, but didn't Dash beat? No, they missed. Okay, so Dash missed. I was thinking maybe of another one, but that's true. And that was, yeah, competition relative to, let's say, McDonald's out there as well. So those are a few. You guys, I did post this here as well. Just wanted to throw this out just on that X link here. These are S&P 500 stocks that did a couple of things this week. So all of the stocks, they beat earnings this week, and they're up on the week. I just listed like the top 10 as of like before our class, just to kind of see. But this just gives you a general feel, because a lot of times when the companies beat, sometimes they go down too. And we don't like it when stocks necessarily drop after earnings. And so the EPS, oftentimes, if they have good earnings and it drops, that means in a lot of cases that Q4 guidance might be weaker, or as I've heard them state on a number of conference calls, they'll say something like it's cloudy or it's more difficult to see. That's not generally this group necessarily. So you might have gotten these on the positive note, and that's why I posted it. Expedia, DuPont. These might be some interesting ones for us to look at right here too, just as we pull this up, because not in every case, but it can happen. If you guys want this, I'm going to post some other ones. A weekend, I will post others as well. But if you wanted to get a sense of where these might turn out at, I mean, you have a few healthcares in there that did okay. And by the way, Expeditors, Datadog, we know Datadog did have the big gap up too. And oftentimes that's a strong beat plus forward guidance as well. But look at that, chemical company. I think Celanese is as well. You got energy, Aflac, and there's others in there too. Okay, so wanted to highlight some of these for you guys and just show you that those are there. And by the way, yep, follow Cam at Cameron May CS. You've got mine listed there. Yeah. Cloudy with a, is that what they, I think they actually say that, right, on the conference calls. Folks, Q4 looks like cloudy with a chance of meatballs. And that's, well, I don't know if it's exactly this, but they don't like the cloudy term for sure, right? It's that fourth quarter. And that fourth quarter can be a doozy in the third. If they're guiding, it's always looking ahead. It's always looking ahead. Here's a company over here, too. We'll finish up on just a few of these, you guys. Look at this. Here's Paycom. What's going on with Paycom? Paycom, look at this. I'm going to show you this. Now, this is kind of just a fascinating sort of a look at some of these companies. It was, you had some strength over here. Look at this. These are longer term higher highs and higher lows. Look at this consolidation right at a big number, 200. It just going flat. You come over here, beat earnings, beat earnings, beat earnings, beat earnings. I know, I looked at them previously. And then these guys, fascinating, they announce Q4 numbers ahead of the Q3 report. And they say, hey, things aren't going so hot, and wham. Now, sometimes when you dig into software, I don't know about you guys, but I have seen software, I've seen some volatility in software. See the volatility? There you go. I'm underlining it, but I'm also showing volatility. Yeah, I should go like this. Volatility. This one was actually pretty, not as volatile, but folks, bam. Instead, bam. By the way, want to see what they did on earnings? Q3. They crushed it. 143 to 194 was the actual. So they beat the Q3, but they reported the Q4 ahead of time. Sometimes the industry that you're looking at can speak to a lot of volatility, and you'll find that in tech. Not all of it. By the way, that Paycom, that's in the S&P 500. So don't think that S&P 500 companies don't have a lot of volatility. Software is in infotech. Now, not all software did that, but I have seen some pretty big moves up or down, big surprises in both. All right, you guys. Well, that is what we had for today. Oh, just back to a general screen here. I'll go to the S&P. We talked about quite a bit: market posture, relative rotations within the market, all different sorts of categories out there as well for you guys to keep an eye on. Folks, it's been great being here with you. Smash the like button. Find this helpful, informative. Give Cam and I a follow on X. I'd love to have you follow us if you're not already under Trader Talks, which I'll just pull up one more time right over here. There's going to be a little follow right over there you can click on, and love to have you on board if you're not already. Now, by the way, if it does say subscribed, don't hit it again, because then you'll just unsubscribe, folks. On that note, everybody have a terrific rest of the day and a fantastic weekend. You made it. We're here. Well, markets aren't quite there, but we're getting close. All right. Thanks so much, Cam, for your help in the chat, folks. I will look forward to future conversations with you, and let's just see how the markets do fare into next week. It'll be interesting to take a look at. Take care, everybody. See you next time.